Welcome to Flip the Cap, the industry's premier podcast that delivers insurance insights with a twist. I'm your host, Kathryn Smith, and I can't wait to dive into a new season with you, with a new brand and a new format. Our mission at Flip the Cap is to provide diverse insights, foster critical thinking, and inspire meaningful dialogue that shapes the future of insurance. This season's insightful discussion will be delivered in much less time and no fluff and no fillers. Today we kick off episode 1 of our new season, and we're going to focus on an issue that's both timely and relevant: wildfire trends and their impact on the insurance industry. Joining me today are two experts from Jencap's property practice, Ben Beazley and Louis Reynaud. Whether you're here looking for a fresh take, a deeper insight, or a competitive edge, you are in the right place. So let's get started. Louis, you recently joined Jencap as a property broker, but you have been working for our parent company for 4 years as our wildfire strategy leader. So set the stage for us in our conversation today, and perhaps take us back to 2020 with the Northern California wildfires, bringing us to present day. From your perspective, what progress have we made as an insurance industry, and where are we still falling short?
Yeah, so the glass fire was devastating. Over 1,500 structures were lost and 67,000 acres were burned over 20 days. During that time, we were already in a hard insurance market. And the outcome of that, we saw for California wildfire exposed properties, they became significantly more difficult to place in the market, notably in the wildlife-urban interface, or as it's called, WUI. Wineries, for example, saw upticks in cancellations. There were rate renewals at over 10x of what their expiring was, reductions in limits as much as half, if not more. So a knee-jerk reaction to the outcome of the fires. And one of the things that we saw was it was notably from lack of education or understanding of these types of fires, which are not so much wildfires anymore, but also more known as mega fires. And with the lack of education, there's also a lack of resources to understand them and underwrite them. You know, one of the things I think that a good example of this that Ben and I saw in 2021, we met with multiple markets, and one of the conversations we were having around wildfire, we'd bring up wildfire, and there'd be a bit more eye rolling and kind of laughing the fact that we would bring up such a risk. And the commentary that we got back is that they were bad. It was bad risks to write, notably wineries. And we simply asked why. And what we got back was a lot of just stumbling in terms of actual information that was pertinent to the underwriting. And what we came to find was it was more of a stigmatization that had been created. The examples that were largely used were seeing the outcomes of the fires on TV and all of these, a lot of sensationalism with, people driving through the fires and things like that. So that was their reaction. It wasn't so much underwriting, but personal reaction to seeing these things. And so you fast forward to this past WSIA and having conversations with those same markets. And what we've seen is a lot more humility, a number of more markets willing to write wildfire, as well as acknowledgement in terms of their resources that they have that they know aren't adequate, but they're open to new resources. And so more willingness to write it, but also more willingness to take in more information so that they can better underwrite successfully.
There was actually a recent executive at Howden that said that as climate risks continue to evolve, it isn't just an insurance issue. It's really an economic and social imperative. So to your point, who are the key players at the table who are working on wildfire risk mitigation, and who potentially should be at the table that isn't?
You have municipalities, you have wildfire camera companies, you have property owner-led fire safe councils, tech industry, government, homeowners, and some insurers. And a number of other stakeholders. And one of the things that we've seen, while they're all doing their own thing, there's a lack of communication between these various entities. And with education, what I mentioned earlier in terms of being a gap, communication is another area where we've seen a significant gap as well. And so one of the things that we've been trying to do is bring all of these various stakeholders together to understand one another, discuss what they know, and understand their strengths, but also acknowledge their weaknesses.
I absolutely agree with where Louis is going and the disconnect with these various entities that individually are gathering a lot of great information regarding wildfire and the mitigation of wildfire, whether it's on a community basis, governmental basis, or whether it's down to the private assets and estates in question. I think what we're trying to do here and what we sponsored through the summit that we had in November and the previous summits we had in 2023 is to give underwriters a holistic view of how wildfire is being addressed and the mitigation of wildfire so that they can more accurately truly underwrite the exposure, because we know the models out there are extremely fallible. In fact, they're completely incorrect. I mean, it's not even worth really talking about them, and it's hurting the insureds and the communities that are putting valuable time and effort into and tremendous expense at applying these mitigation efforts. So I think that's the key here.
So let's go down the path and assume, I think it's a safe assumption that weather is going to continue to increase in severity and continue to be extremely unpredictable in terms of looking at historic data that doesn't necessarily match up with things that are happening now. We literally started the year with an unprecedented wildfire in California, snow in Florida. It was absolutely insane. So how do we stay ahead of it, and how can we actually make a plan that works in the insurance industry for things that we don't know are coming?
So I think it's important to acknowledge with what happened with LA. The outcome was very, obviously, incredibly unfortunate. But if you talk to most wildfire professionals or fire professionals, the outcome was not a surprise. Early insights, IBHS it released an early insight report, and none of it was new, so to speak, for those individuals in that space. But most of the buildings were built before or in and around the 1950s. And so with that, building code was not up to par, taking into account wildfire resiliency. Then you just had the proximity of adjacent structures, which created conflagration, the lack of structure hardening and defensible space, irrespective of the building code, unmanaged surrounding fuels, invasive plants like eucalyptus that are highly volatile, and a number of other things. But with that, I would say that there are communities that are already ahead and doing what they need to be doing. Going back to talking about the glass fire and the outcome of the glass fire with Napa, they're ahead of the curve in terms of just getting everything together through Napa Firewise, all their local fire safe councils, the various wineries, working through CAL FIRE, and working through their various wildfire resource partners. And it's not just Napa. You also have Marin County, Sonoma. There's other counties in California. There's other states. But one of the things that I think is really important when it comes to wildfire is that this isn't just, as you mentioned, the things going on with all of these various weather calamities. This isn't just a California issue when it comes to wildfire. You have wildfires that have occurred in Georgia, in New York, in South Carolina, Arizona, Texas, Montana. And they're going to become more pervasive over time. And so it behooves the insurance industry to get behind understanding mitigation practices, structure hardening, defensible space, so that they can properly underwrite and help incentivize property owners to adhere to those standards.
Can you share an example? You mentioned the proactive risk mitigation that has occurred following the 2020 wildfires. What's an example of a system that's been put in place that is working to mitigate wildfire risk? in Northern California?
A good example is a major winery that we write up there. They have spent probably $3 to $4 million installing water cannons on the roof of their buildings. They have purchased fire retardant that they can spray on the outside of the buildings. They have cut out the conifers. The huge change that's happened around Napa is the realization that it is the undergrowth underneath the trees that lead to many of these fires being able to gain strength. And so they've cleared great swaths of undergrowth. And so all of those things have contributed largely to giving a very different fire score. I mean, and almost down to being non-existent. Fortress Fire that we work closely with was out at that particular winery I was mentioning and said that what they've actually done there will actually make that property probably fireproof. It should never have a loss, which is quite a statement. And so I think, yes, there's pain in there from an economic standpoint. There's pain there from probably a time standpoint to a degree. But in the long run, it is going to make the insurability of those assets and quite frankly, forgetting the insurability, just the continuation of the business in the event a wildfire breaks out, far more likely, and it's a lot less stress on the owners.
If you're a retail agent listening and managing a portfolio of property business, wanting it, of course, to be profitable property business, what tips do you have for a retailer to successfully pursue wildfire risks?
I think the term wildfire is a little bit of a misnomer. Really, I like to think of this, and I especially think about Southern California when I use this term, a convective firestorm, which is really what it is. I mean, it is completely fueled by the winds that generated Santa Ana winds in the case of Southern California, but winds exist everywhere. And Louis also is completely correct that we're talking about California, but there are so many states that are affected by this peril. The other thing about wildfire is it is very unique, a very unique peril from the standpoint that either you have a loss, so either you have no loss or you have 100% of a loss. There is very seldom, I would say probably less than 5% of the time, you have a partial loss from a wildfire. It's either there after the fire comes through or the asset's not there. Really, when you're talking to retailers, they have to go and get a lot of information surrounding what Louis has been talking about, the mitigation, both on a local level, a governmental level, as well as the actual asset and the property itself. Whether that's a homeowners association, where they have a concerted plan that they're going to adopt, and they're going to be working with people like Fortress Fire to come up with that plan and to have ongoing surveys done. Or it's California Firewise and their team and where the new fire breaks are. One of the huge benefits in Northern California is the installation of all these thermal cameras throughout Napa and Sonoma, which went into effect on June the 1st of last year. And supposedly about 77 fires were tracked by those thermal cameras, of which 22 were extinguished before the first 911 call came in.
Wow.
I mean, when we talk about efforts that are being made, again, I go back to the modeling. You know, if an agent is going to just rely upon the underwriter going to his regular sources of information, which is going to be a model of some description, it's not really doing a service to the client. So you've got to invest the time and effort in peeling back the onion on what specifically has been done with respect to wildfire or convective firestorm in that particular area.
What was interesting with what Ben mentioned, just to piggyback off of, is just the uniqueness of the peril of these fires. And I think for our industry to understand, we have, over time, we've gotten used to looking at catastrophe perils in a certain light, and that being windstorm and earthquake and flood. And the difference between those two types of perils, or I'd say wildfire and those, is that wildfire, with all these mitigations and technologies, the things that Ben was talking about, you can manage the severity, the size of that fire by way of implementing best practices, defensible space, structure hardening. Whereas you can't do that with a named windstorm or an earthquake. You can do your best to prepare, but oftentimes keep your fingers crossed that you don't lose your property. Whereas with wildfire, through collective efforts and individual efforts, you can protect yourself from a loss. And so that's one of the things that agents need to understand to articulate to their clients, but also underwriters need to understand as well, so that they're implementing that into their underwriting and acknowledging those practices, because they have a significant impact on the outcome in terms of the survivability of a property.
The most amazing thing in Napa and Sonoma is the community is completely invested in working together. I mean, neighbors are talking to neighbors and working with neighbors. And if somebody's got a tractor that can build a fire break, then they're going to go over and help their neighbors out. I mean, it is extraordinary, the community effort here. And that's another thing where agents need to think beyond looking at that individual asset and say, so what is the community doing? What is the broader strategy here? And try and find the resources that can offer them that information.
If you have a structure that is hardened and it has defensible space, but their neighbors are within less than 50 feet and they're not adhering to those standards, you can still have a loss. So it's incredibly important that that sense of community that Ben's talking about, in terms of adherence to these mitigations and structure hardened defensible space practices, they go an incredibly long way.
So Ben, what in your opinion is the most viable path forward to restoring stability in the property insurance market specific to the peril of wildfire?
We are pulling together a lot of the resources that Louis has alluded to during this conversation, and we are presenting a strategic plan to the underwriting community that if these different agencies and companies, firms, that are involved in mitigation and hardening and protecting assets actually talk to one another and involved in a given risk, that it leads that risk to have a much better chance of being viable and being profitable to the insurance company, and therefore getting terms offered to it. And ultimately, that is the goal at the end of the day, is finding a market, because the insureds out there have to have some protection, and as long as they're willing to invest in hardening their assets and protection of their assets, then I'm pretty certain the insurance community is going to be out there offering them a solution to their needs.
I think the most viable path forward is just doing the things that we talked about. The insurance industry acknowledging the best practices, structure hardening, defensible space, community initiatives, and incentivizing property owners and communities to do those things by way of rate relief and acknowledgement in their underwriting process, I think is going to be the most viable path forward. The insurance industry can play a very big part on the resiliency of these communities that face wildfire exposure. And with that, the reinsurance industry also needs to get behind that and allowing these carriers to underwrite, utilizing, acknowledging those variables because of how effective they are.
Well, thank you both so much for your insights. I really appreciate your time. And I know that this is an ever-evolving topic that I feel sure we're going to get together and continue to talk about. 3 to 6 months from now, this conversation might be completely different. Anytime there's a big event like this, it sparks everyone's action on a topic. So to be continued for sure. You are tuning in to Flip the Cap, the industry's premier podcast that delivers insurance insights with a twist. We'll see you next time.